Look, it's Financial Friday Live. It's Latoya, yours truly, coming live from Genesis Enterprises. We're just going to give it a moment here for the word to spread that we're online, and we're going to get started. Hope everyone's having an awesome Friday. As you guys know, I'm here in Texas. We had a little rain this morning, a little thunderstorm, but it's so pretty out today. Should be having a nice warm weekend. So I'm looking forward to it. Just give it a moment here. Okay. So while the audience continues to build, as I said, I hope everyone's having a great Friday. Our topic today, income does not equal wealth. So hope you guys are ready for it. It's going to be a good one. It's going to be a good one. And also what I'm going to do, I'm going to break down to you as well the differences of income versus wealth as well, because I see a lot of people, especially with the memes and stuff that go around that, they tend to, hey, Brad, how are you? They tend to use these words interchangeably, but actually they're two different words and have two very different meanings. So that's what I'm here for today, to kind of clear that up and kind of give you a basis on where to start with that. Give me a moment here. My lips are a little chapped. So we're going to go ahead and get started. Income. What is income? Income is what you actually earn. Okay? So basically, you go to your job or you're running your business and you make a sale. As a result of that service or product, you receive income. So basically, it's just a payment for your services, right? Okay. Wealth. Wealth is actually the net worth of a person. Believe it or not, we all have net worth, whether it's positive or negative. I would probably say over 65% of Americans are probably negative when it comes to net worth. Now, you may be wondering, well, how do I know if I have a negative net worth? Well, net worth is calculated by the total value of your assets minus your liabilities. Very simple formula. So, in other words, we're going to do a little math here. If you have, where's my calculator? So I'll just kind of give you guys an idea on what I mean by how to calculate your wealth. So say you may have 200 grand in income. In assets. So 200 grand in assets. Your liabilities, aka debt, is 250,000. Well, 50,000 is the difference, but it's a negative number. You have a negative net worth, which means you're in debt. If you have a negative net worth, it means you're in debt. It means your liabilities are worth more than your assets. Now, when you get to people like Oprah and Tyler Perry and Bill Gates and the Rockefellers, those in that nature, they may be like, wow, they're worth $1.3 trillion. Now, this doesn't really mean that they have $1.3 trillion like cash, okay? So let's get that understanding. This trillions of dollars is not just accessible as liquid, okay? These are trillions of dollars in assets. Assets could include real estate, which can include homes, rental properties, multi-unit buildings. It could include owning a hotel. It could include owning a profitable restaurant. These are assets. So assets are a good thing. Believe it or not, most Americans, over 60%, will earn their net worth through home ownership. But there's a trick to that. It's not considered an asset. The home that you have a mortgage on is not considered an asset until it's paid off. So if you're making a house payment, it's a liability. You have debt. It's not an asset until it's completely paid in full. Okay? So assets, in other words, adds to your net worth. Liabilities take away. So how do you get your net worth? Your assets minus your liabilities, and whatever number that is, that's your net worth. So right now you may be saying, well, crap, I got a negative. That's fine. Everybody starts off as negative. That's where the wealth building starts coming in. Investing, real estate, buying land, partnership in other businesses. You want to get those multiple streams of income to increase those assets. Okay? So, just want to break that down. Also, no. Please. So, sorry about that. I'm sorry about that. My 5-year-old just walked in, so I lost my concentration. So, as I said, with wealth, now a lot of people may be wondering, well, how do I get the gap of wealth? Like I got the income. Oh, another thing I want to talk about. These are mainly for my 6-figure earner people. Okay, I want y'all to listen to this. You won't believe how many people that make 100,000 plus and they're broke. Let's just get that out there. There are people that make 6 figures. There are people that make 7 figures and they're broke. Why? Because they live above their means. If you're making $500,000 a year and your expenses every year is $600,000, you're broke. If you're making $15 million a year and your liabilities are $5 million a year, you're broke. Sorry. How can you build wealth? Let's take that same scenario with the numbers, okay? You have $15 million in assets, but your liabilities are $10 million. Your wealth is the $5 million. Ding, 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 ding. That's where you get your net worth from right there. That $5 million is the gap. So that lets me know if you're making $50,000 a year and your liabilities are only $30,000, you have a nice net worth of $20,000. A lot of people can't say that. Okay. So what I'm basically trying to explain to you is wealth and income are completely different. Income is the actual payment of your service or of your service or product that you're providing to get paid, right? Wealth is the difference between that asset and that liability. So that's what you want to work on, is that gap. Now you may be wondering, well, how do I decrease the gap? I'm going to tell you how. Make sure you're maximizing on your income tax returns. So basically make sure you're not, having to pay in. So you want to make sure you're maximizing your deductions for whoever does your taxes. And if you are looking for a tax professional, I am here if you need me. Also, paying cash for things that holds value. I'm not talking about the latest car or the latest shoes or the latest bags. Okay? Stuff that appreciates in value. Real estate, real estate, real estate, land, real estate. Real estate. It does not have to include your primary home. It could be a vacation home that you rent out. That's rental income. Once that home is paid off, it's now an asset. You can add that to your financial portfolio. It can include stocks, bonds, mutual funds. This is the stuff that you need, okay? To create assets. You want assets. When you're blowing money on the frivolous stuff, the materialistic stuff, those are liabilities. You're not gaining anything from getting the latest designer handbag. Trust me, okay? You spent that $1,000 on that handbag. 6 weeks later, it's probably worth $500. All right? Okay. So just to sum up everything. Oh, if anyone has any questions for me on what I just explained, please let me know. But just to give a recap, as I stated, you want to focus on that gap. How do you focus on that gap? You reduce expenses. You increase your assets. You increase your savings. It can be liquid savings, like I said, liquid savings, real estate, land, rental income. There's tons of ways to generate wealth. The key word is to generate. You can't generate unless you're researching and knowing what to invest in. Investments creates wealth. So it could be your own business. It could be you being a partnership in another business or as an investor. That's what creates wealth. So wealth doesn't just fall out the sky and, oh man, I make $150,000 a year. It was $150,000 a year if your expenses are $200,000. It's irrelevant, right? We want to focus on that gap. So if you're in the positive, you are ahead of the game. If your assets equal more than your liabilities, you are already on your way to wealth. Oh, Brad has a question. Increase income, side business. Yes. If you operate your business debt-free, that like I do, I actually operate my business completely debt-free. So everything that I make for my business is actually freed up income. It's not going to anything. Everything I make is 100% profitable. Okay. So that's why I tell a lot of people. A lot of people have this notion that you have to go into debt to start a business. No, you do not. It may take you a little longer to build it, but trust me, the last thing you want to do is start off a business in debt. That's what you do not want to do. If you need to save up for a year or start off slow like I did, build a client here, build a client here. Eventually that, and then also if you can offer multiple services. As you know, tax season is one of my services. Well, a bulk of that money pretty much stops in April. I'm open year round though. I offer other services to compensate for that. Okay. Which includes payroll, bookkeeping, financial management, and business consulting. So I offer those services year round. Okay. So the key to wealth is that income has to constantly come in. That's what you want. You want your money working. When you're asleep, you want that dollar working. All right. That's what you want. Okay. So as I said, you want to concentrate on the wealth. Wealth is between your assets and your liabilities. That's your actual net worth. As I said, if you're making $50,000 a year and your expenses or liabilities is only $20,000, you got a net worth of $30,000. You need to use that $30,000 to help build your wealth to $300,000 and then to $3 million and then to $30 million, however you want to go. I know I have goals of being a millionaire. I don't know about anybody else, but I'm working on that right now. I'm not waiting till 40 to do that. I'm 32 years old. And I don't want to be doing this to 80. I'm sorry. No, I don't see that. So, My husband and I have a retirement age set between 50 and 55. If we want to be like, wake up one day, you know what? I'm done. I got my money where I want it. I'm good. Now, of course, I may not completely step away from it, but I would say this: I'll have that option to work if I want to. Everybody wants that option at that age. I don't know anybody that wants to work till 75, 80 years old. I have not met that one person yet. Even entrepreneurs that I know don't even want to do it, where they're putting in 50, 60 hours a week. I'm not trying to do that at no 55, 60. I don't know about y'all, but that's why I'm making my preparation now, so I can sit down at that age. So it's all about preparation as well. And also, if you are going to be looking into investing in stocks and things like that, make sure you're going through a legitimate investor. Oh yeah, quick tidbit. I can get y'all, if you don't have a 401k or whatever set up right now, I'm about to tell you how to set up one today. Go to your bank. $100. Who doesn't have $100? You can open up an individual retirement account today with $100. That's what I want to challenge y'all to do. If you don't have a retirement account, you need to set up one today. You can do this stuff online. You don't even have to go in person and talk to anybody anymore. You can go through your bank, or you can go through Edward Jones, some of the big wigs, some of them. $100. That's it. And just start contributing to that. You got to start somewhere. I started somewhere. We all have to start somewhere. But you will be amazed at what that $100 turns into. And like I say, you don't just put the 100 in there and stop now. I'm just saying you need 100 to start it up. Okay. But yeah, use 100. You get that $100. I know most people are working that tunes in with me. What's $100? You spend that on eating out at one time. So there you go. $100. Put that in an IRA. Start contributing to that every month. I think the max you can contribute a year is $5,250. So I'm finna tell you how less that is month wise. So $5,250 divided by 12. $437 a month. You just contributed your first 100. Let's just say if you did $100 a week. Could you do that? Or are you willing to put back $100 a week to build wealth so you can retire at a nice age and all your debt and stuff be paid off at 50, 55? That's what I'm working on. Brad. Yes, I am very big on banking black. Yes, sir. Yes. Actually, we bank with One United Bank. Great bank. They actually don't have a local location here in Texas, but their online presence is phenomenal. Like, they have an app and everything. They do the same stuff as the big banks do. You can do mobile deposits. Now, as far as the individual retirement account, let me Google that real quick. Let's see. And see if they offer that. So it looks like they don't offer IRAs, but you don't have to necessarily go with the big banks to do the IRAs. Like I said, credit unions, a lot of people offer them, so that's not a, biggie. But you just want to start somewhere, okay? It's the max for all accounts or each account. Oh, that's for each account, Brad. That's per person. That's why it's called an individual retirement account. That's per person. So if you're married, that's $10,000 a year. Yes, sir. And I can actually give you the exact figures on that. Hold on. But if I'm not mistaken, let's see. Okay, so if you're age 49 and under, For 2017, it's 5,500. You must have employment compensation. So basically, if you're a W-2 employee, you can contribute up to 5,500 a year in your IRA. Now, if you're a 401k, of course, it's a lot more. It's up to 18,000 a year. So there's ways to make that money work, okay? And I can actually, and I'll actually share this as a link at the end of my video so you guys can go view it for those that are interested in IRAs. Is there any other questions for me? And I thank everyone for tuning in and asking questions. Hi, Jordan. So if no one else has any other questions for me, we're going to, oh. Yes, you can have as many, yes, Brad, you can have multiple IRAs, yes. And let me just verify that. Give me 1 second. Okay, so that's what I figured. You can have multiple IRAs, but the amount doesn't change. So basically, if you have 3 different IRAs, the max is still 5,500 for all 3 combined. Does that make sense? So that's what I figured. So yeah, you can have multiple IRAs, but you still can't go over the limit of 5,500. So that's the annual period. Okay. But you do have other benefits. Oh, if you add a Roth IRA, let me double check that for you. Okay, so the Roth IRA is the same, Brad. It doesn't change. They just combine all of it for the maximum contribution limit each year. So it works the same. I think one of the biggest benefits probably would be to have multiple IRAs is to divert your money more, if that makes sense. So it probably have more to do with the funds, the funds of having a diverse portfolio, if that makes sense. And also another reason for multiple IRAs, the probably best benefit would probably be for tax purposes. So, you could probably maximize on your tax return with the multiple IRAs. So I can definitely see that as a benefit. So basically the way it would work is, let's see. Yeah, so in that benefit, it would benefit to have a traditional and a Roth. So basically, the traditional IRA would allow you to give you the tax deduction while you're working, and the Roth IRA will give you better taxes for when you take the money at retirement. So if you were to do multiple IRAs, I would definitely say open one of each of those for the tax benefit side, if that makes sense. Something on the lip. Okay. Oh, municipal bonds. Okay. Hey, Demario. So, that's going to be all for today. Like I said, I'll make sure I put these links at the bottom of the video once we're done. And I hope to see you guys for the next Financial Friday.